Understanding areas of liquidity can be very complex a lot of the times for new traders, and finding out key levels the price will mitigate before a continuation to whatever direction you want to trade it to. In this video, I'm going to share with you an example of a trade I got into while understanding the liquidity and then knowing what time frame break of structure to use to get into the marketplace. So the first thing I did was to scale from the monthly time frame, and on the monthly time frame you can see very clearly we have an inefficiency resting right here, and then I outlined the inefficiency. The second thing I did, I went to the weekly time frame, and on the weekly time frame you can see that the inefficiency on the monthly aligns with an inefficiency on the weekly. And also looking right here, we have liquidity. We have a low resistance liquidity resting right here as well. So I want to see liquidity resting above my point of interest. In this case, this inefficiency is my point of interest, and this right here is liquidity. The next thing I did was to scale down to the daily time frame. And on the daily time frame, I want to see the daily time frame align with the weekly and the monthly. And on the daily time frame, you can see we have this inefficiency right here, and you can also see that we have this high, a low, and then a break of structure. So I want to see price retest this high, mitigate this inefficiency, and as you can see very nicely, that happened right there. The moment price mitigates this position, the next thing I want to see is a 30 minutes break of structure to the upside, and we'll go to the 30 minutes time frame, and you can see very clearly my swing high and my swing low on the 30 minutes time frame. This is the 30 minutes high, and then right here we'll have the 30 minutes low as well, and I want to see the high get broken, and right here the high got violated very perfectly. Now the next thing I did was to look for the last down move before an expansion that broke structure, and right here is the last down move before an expansion that broke structure. So this is my point of interest where I'm going to be looking for entries into the marketplace. So once price is in here, I'll be looking for a 5 minutes or a 4-minute shift of market structure to the upside, and then I get an entry into the marketplace. So right here now, I don't know which one is going to be the liquidity that price is going to mitigate before an expansion to the upside. I don't know what it's going to be. Looking at the 30 minutes time frame, we have inefficiency, we have liquidity, so I don't know which one is going to be. So now pay attention to this. This is how I use the line chart in order to know where the liquidity is going to be. So I scale from 1 hour time frame, and I'm looking at 1 hour time frame. I'm right here. What I'm focused on is the last down move before an expansion that broke structure. And on the 1 hour time frame, you can see this was the last down move before an expansion that broke structure, and I am interested in the liquidity below it right here. I want to see a run on that liquidity. I go to the 4 hour time frame as well, and I'm looking at the 4 hour time frame, and on the 4 hour time frame I'm seeing this is the last down push before an expansion, and then I mark the liquidity as well. So what I do is these two zones, I'm more interested on this 4 hour liquidity. I'm more interested in this 4 hour. So this one, I'm just going to make it blue, but I'm still going to pay attention when price comes to that key level. So what I now do, I go to the normal bar chart. I want to see what it looks like. And on the bar chart, I want to see an inefficiency at that key level. And right here, you can see an inefficiency resting above the 4 hour liquidity on the line chart. And right here, this makes this key level a high probability. So I'm going to make this a different color, make it orange. So now this makes this key level a high probability area. Once price is at that key level, once price mitigates this key level, I'm looking for a 5 minutes break of structure. And as you can see so far, even if I used this one, when price came in there wasn't a break of structure to the upside. Price just dropped beneath it and then went straight to the 4 hour liquidity using the line chart. And right there, you can see that very beautifully. All I want to see is a 5 minutes break of structure. And right here, you can see very nicely price created a high, created a low, and then it broke structure. The moment it broke structure right here, two places I place entries. First entry is the high right here. First entry, the high, and then 2 pips below this low is going to be the stop loss. Second entry, I start to scale down to the smaller time frame. I want to see the last down close candle before an expansion that broke that structure. I'm going to use the bar replace, so it's just very much easier for us to see what I'm talking about. So we'll go to the 2 minutes time frame, And then on 2 minutes time frame, you can see this is the last down push before an expansion. So we'll go to the 1 minute because we want to see it very perfectly. On the 1 minute, you can see that very nicely. This was the last push. So this right here can be the second entry, and this is the first entry. But personally, I only use the high right here as my first entry. I only use one entry. I didn't want to just place so many orders. I don't really like entering so many orders. It's either one entry or two entry max. So, but for reference, for anyone watching this, you can use here as a first entry, second entry, and then stop loss 1 or 2 pips below this low. The reason I add an extra 1 or 2 pips below this low is just in case if price comes really very deep, so the slippage doesn't take you out. That is why I usually give it a little room. So right here would be first entry, second entry. You can use second entry right here. Then stop loss, same place. Just if this is this 36 pips, just add like 3 pips to it. Right there is very perfect. Now, talking about the take profit position. Let's talk about the take profit positions. So now if we are looking for where price is gonna go, overall I'm very bullish on NASDAQ. Overall, I'm very bullish. And if we're looking at the weekly time frame, so if we're looking at the weekly time frame, I'm just going to have to reload my chart for 1 second. So if we're looking at the weekly time frame, you can see very clearly on the weekly time frame the key levels that I'm anticipating for price to come into, and the reason for that as well. I'm going to share with you the reason for that. So the key level, if we look at the weekly, you can see right here, this is my point, this is my take profit position, these key levels, low resistance liquidity. If we go to daily, it looks very much clearer on the daily time frame. Low resistance liquidity resting right here. You can see very nicely the low resistance liquidity resting right here. See how price smashed through it. That is the same way I'm expecting price to smash through this low resistance liquidity resting above these highs. Then that is the last take profit position. But in the meantime, I'm anticipating for price to draw into this entire position because we also have this low resistance liquidity resting right here as well, and we'll have all these inefficiencies. So right here would be the second take profit position right here, in here. First take profit position would be in here. Second take profit position will be in here. Then third take profit position will be above these highs.